Welcome to Everything You Need to Know About Finance. I'm your host.
And I'm your expert for today's deep dive.
Today we're jumping into a topic that's, well, everywhere. Artificial intelligence, AI. Specifically, investing in it.
It's definitely one of the hottest areas in finance right now.
Our goal here is to really unpack what you need to know. We'll cover the basics of the tech itself, look at the investment landscape of, stocks, ETFs, and talk about opportunities and risks.
And we'll be looking at how things have performed both recently and over the last few years.
But first, a quick but important note.
Yes, everything we discuss today is purely for informational and educational purposes. We're looking at the data, the trends, the information out there.
But we're absolutely not giving financial advice. Your investment decisions should always be based on your own situation, your goals, and ideally, conversations with a qualified professional.
Exactly. Consider this food for thought, not a recommendation.
All right, so let's dive in. Before we even think about investing, what is AI? We hear the term constantly, but what does it actually mean for a machine to be, intelligent?
At its heart, AI is about getting machines to mimic human intelligence using sets of instructions, or algorithms. Think of it as making machines smart enough to automate tasks, sometimes incredibly complex ones.
Okay.
And there are really two main flavors to understand: machine learning and deep learning. Machine learning is where algorithms learn and improve by being fed data.
Like learning from examples.
Precisely. Deep learning is a more advanced subset. It allows algorithms to learn more independently, discovering patterns on their own, but it needs absolutely vast amounts of data to do that.
Okay, let's make that a bit more concrete. Imagine, say, sorting different types of financial assets.
Good example.
A machine learning system could be trained on labeled data. This is a stock, this is a bond, this is a commodity, and then sort new ones accurately.
Right. It learns the defined characteristics.
But a deep learning system might be able to look at, complex derivatives it hasn't explicitly been labeled on, and still figure out how to categorize them or even spot unusual risks just by analyzing massive amounts of market data.
That's the idea. It can potentially find patterns humans might miss, given enough data and computational power. So how does that actual learning or training happen?
How does it work under the hood?
It's basically a two-step process: training and inference. First, you train the algorithm. You show it enormous amounts of data. Let's say you wanted to identify potentially fraudulent transactions.
Okay.
You'd feed it millions of transactions, clearly labeling which ones were fraudulent and which weren't. You're teaching it what fraud looks like in the data.
So it learns the red flags.
Exactly. Then comes inference. That's when you use the trained algorithm on new unseen data. You show it a new transaction and ask, is this likely fraud?
And hopefully it gets it right.
A well-trained system will, yes. But, it sounds simple when we describe it like this. Behind the scenes, it's a tremendous amount of data, complex coding, sophisticated math.
And computing power, right. That seems crucial.
Huge amounts of computing power. Making these algorithms run quickly and efficiently is a massive challenge.
So I used this analogy before. Is it like a race car? The algorithm is the design, the engine is the computing power.
And the fuel is the data. That's a pretty good way to think about it. You need all three working together perfectly.
Right. And that combination allows AI to automate so many things, from simple stuff like turning off your lights to incredibly complex systems like autonomous driving or high-frequency trading algorithms.
And the applications we see most often now are things like chatbots, those recommendation engines on streaming sites, fraud detection, image recognition.
Robotic process automation in businesses, too.
Yeah, imagine asking a chatbot to, say, analyze the company's last 5 earnings reports, identify key trends, and summarize risks all in seconds. That's the kind of efficiency we're talking about. And that level of efficiency, that potential to disrupt, is why AI is expected to unlock huge improvements across the economy. It's potentially one of the biggest tech markets we've seen.
Okay, so that brings us squarely to the investment side. If AI is this transformative, how do you, the listener, potentially get involved? What are the opportunities?
Well, the research points to 2 main avenues for investors. First, the infrastructure, the actual picks and shovels of AI, the chips, CPUs, and especially GPUs, the graphics processing units that are needed to do all that heavy computational lifting for the algorithms. Demand here is expected to soar as data centers keep expanding and upgrading.
Makes sense. What's the second?
The big cloud service providers, think Amazon Web Services, Microsoft Azure, Google Cloud. They provide access to those powerful data centers.
So companies rent the computing power instead of building it all themselves.
Exactly. It's often way cheaper and more flexible, especially since the tech evolves so fast you need constant upgrades. Renting makes more sense for many.
So those are the core opportunities. What about the big advantages, the reasons why someone might specifically seek out AI stocks?
Well, number one is that mass disruption potential we talked about.
Yeah.
AI isn't just one industry. It cuts across almost everything: healthcare, finance, cybersecurity, manufacturing, you name it.
So huge growth potential.
Immense room for revenue growth and market dominance for the leaders. Then there's innovation. AI drives automation, boosts efficiency, cuts costs. That gives companies using it well a serious competitive edge.
And the market seems to love it.
That's the third point: investor enthusiasm. AI stocks have often seen really rapid price gains, fueled by positive market sentiment and the constant stream of new breakthroughs.
But there are always buts in investing. Every opportunity has risks, right? What are the downsides or challenges with AI stocks?
Absolutely. A big one is high valuations and speculation. Because there's so much excitement, many AI stocks trade at really high prices relative to their current earnings.
Meaning they might be overvalued.
Potentially, yes. The long-term story might be great, but in the short term, there's a risk of significant price corrections if expectations aren't met. Or they could fall into a value trap, looking cheap but staying cheap for good reasons.
Okay. What else?
Regulatory risks. This is a big unknown. Governments globally are starting to look closely at AI.
Worried about things like data privacy.
Privacy, algorithmic bias, job losses, even national security concerns. We're seeing new laws pop up like the RAISE Act in New York or TREGA in Texas, trying to set standards.
So the rules of the game are still being written?
Very much so. And new regulations could definitely impact how AI companies operate and how profitable they can be.
That makes sense. And you mentioned competition earlier, too.
Fierce competition. You've got the giants, Alphabet, Microsoft, NVIDIA pouring billions into R&D, but new disruptive startups can also appear very quickly.
So staying ahead is tough.
Very tough. Companies that fall behind technologically risk becoming irrelevant fast. It makes picking long-term winners really challenging.
And it's not cheap to play this game, is it?
Not at all. Building and training the most advanced AI models requires enormous computing power, thousands of processors, specialized software. It's incredibly expensive.
More expensive to train than to run.
Far more expensive generally. Plus, you need top talent data scientists, AI engineers, and they're in high demand and command high salaries. Building and keeping those teams is a major cost.
And that ties into ethical issues too, right? The black box problem.
Yeah, that's a significant one. Sometimes even the creators don't fully understand how an AI reaches a specific conclusion. It's like a black box.
Which makes it hard to trust or fix if it's biased.
Exactly. Issues around data security, privacy, potential discrimination baked into the models, and even misuse of the technology are all major ethical hurdles that need addressing. Building transparency is key.
Okay, so we've got the opportunities, the risks. How do you actually invest? Stocks and ETFs seem like the main ways for most people.
They generally are, yes. Stocks or exchange-traded funds.
Let's talk stocks first. The appeal here is you can be really specific, right? Target chip makers or cloud companies or maybe firms using AI in a specific sector.
Right, you can focus your bet. And some individual AI stocks have seen truly incredible growth over the last few years.
Can you give some examples of how the market looks at these, maybe based on different criteria like value or growth?
Sure. So looking back around mid-2025, for instance, you might see certain companies flagged as potentially good value. This often involved looking at metrics like the price to earnings or PE ratio.
Well, our PE suggesting it might be cheaper relative to its earnings.
Potentially, though you always need to ask why it's cheap. Examples cited around that time included maybe Baidu, the Chinese tech company. They've got search, cloud, but also their Apollo Go robo-taxi service, which is a huge AI play in autonomous driving.
Interesting. What about pure growth? Companies just expanding rapidly.
Yeah, for fastest growing, you look at things like year-over-year revenue growth or earnings per share, EPS growth. Around that same time frame, names like Innodata Inc. were mentioned.
What do they do?
They're in data engineering, basically preparing the high-quality data needed to train large AI models for big tech firms. They showed huge EPS and revenue growth percentages.
So providing essential services for the AI boom.
Exactly.
Yeah.
Others mentioned included maybe Clearwater Analytics using AI in investment accounting or EverQuote using AI in their insurance marketplace.
And then there's momentum stocks that are already rising and tend to keep going.
Right, the momentum strategy. Very popular in fast-moving sectors like AI. Companies cited here sometimes had astronomical 12-month returns. Think quantum computing, Inc., working on novel AI hardware, or TSS, Inc., involved in data center solutions.
Wow, returns like over 2,000% in some cases.
Yeah, the numbers can be eye-popping, but momentum is heavily driven by sentiment, so you have to be careful and still look at the fundamentals.
Definitely need to do your homework. By the way, if you're finding this breakdown of AI investing interesting and useful, please take a moment to like this video and subscribe to our channel. It really helps us bring you more deep dives like this one.
Okay, so that's individual stocks. But picking winners is hard, and it can be volatile. What about the ETF route?
Right, exchange-traded funds. The idea here is diversification.
Exactly. Instead of betting on one or two companies, an AI ETF holds a basket of companies involved in the AI ecosystem. Gives you broader exposure.
So you're betting on the overall trend rather than specific execution.
That's the goal. Capture the broad impact of AI. And remember that huge capital spending cycle we mentioned. For chips, data centers, power.
Yeah, the trillion-dollar chip market estimate by 2030.
Right. ETFs are a way to play that broader, long-term infrastructure build-out without needing to know exactly which chip designer or which cloud provider will ultimately win the biggest share.
And it feels like we're still pretty early in this whole AI revolution, doesn't it? Especially since things like ChatGPT really brought it into the mainstream consciousness relatively recently, end of 2022.
It does feel like the early innings. Some argue this is fundamentally different from, say, the PC or smartphone waves. We're talking about manufacturing intelligence itself.
A deeper shift.
Potentially, yes. And these AI models are constantly getting smarter, more complex, demanding more power, more data. The cycle seems set to continue for a while.
So how have these AI ETFs actually performed? What did the numbers look like?
Well, looking at benchmarks like the NASDAQ C-Key Artificial Intelligence Index, performance has been strong. As of mid-2025, you saw figures like roughly 6% return over the prior month, maybe around 5% over the year, but closer to 80% over 5 years.
That's a significant 5-year run. What about specific ETFs people could look at?
There's a growing range. For example, you might see the X-Trackers Artificial Intelligence and Big Data UCIce ETF, often noted for having a lower expense ratio and showing solid long-term returns, like nearly 100% over 3 years in some periods.
Okay. Any others with different approaches?
Sure. Something like the ARK, Artificial Intelligence and Robotics UCIce ETF, tends to be more actively managed, potentially higher risk, but also aiming for higher returns, maybe showing over 50% in the last year during strong periods. Then you have others like the Amundi MSCI Robotics and AI ETF or the LNG Artificial Intelligence ETF.
So different flavors, different focuses within AI.
Exactly. Different fund sizes, different expense ratios, different performance profiles over different time frames. It shows there are various ways fund managers are trying to capture this theme.
But ETFs aren't risk-free either, are they?
Definitely not. They can still be affected by inaccuracies in the data underpinning the AI models of the companies they hold. They're exposed to that intense competition we discussed.
And rapid obsolescence if the tech moves too fast.
Right. And dependency on end-user demand actually materializing. Plus, the same regulatory concerns that hit individual companies can absolutely impact an ETF holding those companies.
So it spreads the risk, but doesn't eliminate it.
Precisely.
Okay, let's bring it all together then. For you, the listener, trying to make sense of this, what's the bottom line? Is AI investing worth considering?
The general view is that AI represents a major long-term growth area. It's hard to ignore the potential. However,
it's not a simple buy anything AI strategy.
Not at all. Not all AI investments are the same. The key is deciding how you want to invest specific stocks, broader ETFs, and how much exposure makes sense for your portfolio and risk tolerance.
So it really comes down to due diligence.
Absolutely. Scrutinizing a company's financials, understanding its competitive position, or really digging into what's inside an ETF and managing your risk carefully, not just chasing headlines or getting caught up in hype.
You know, that raises a really interesting question. AI itself is constantly learning and adapting.
It is.
So how do we, as investors, as people just trying to understand this world, how do we make sure we're continuously adapting our understanding and our strategies to keep pace rather than just reacting after the fact?
That's a fantastic point. It requires ongoing learning, staying curious, and being willing to reassess your assumptions as the technology evolves. It's not a static field.
A powerful thought indeed. And looking ahead, it seems undeniable that AI is more than just a passing trend.
I think the consensus is clear on that. The research we've looked at frames it as building intelligence, a fundamental shift that's captured the focus of the entire tech industry.
And the engine driving growth for the foreseeable future.
For the rest of this decade, quite possibly. That massive capital investment cycle and Infrastructure, data centers, chips, power is expected to run for many years yet.
What an incredible area to watch. Well, that wraps up our deep dive for today.
A lot to think about.
Definitely. And just one final reminder. Everything we've discussed is for educational purposes only. It is not financial advice. Please do your own research and consult with professionals.
Thanks for tuning in.
Thank you for joining us on Everything You Need to Know About Finance as we explored the world of AI investing. We hope this gave you a clearer, more informed perspective on this truly revolutionary field.